As we move into the summer months here in Northwest Arkansas, the real estate market is heating up as well. So make sure to stick with me to the end of this video for all the market details here in your May 2024 monthly market update. As usual, let's start with our inventory levels, and we are now down to 4.21 months of inventory. And that means we're basically back in a seller's market. So for reference, that statistic tells us that if no other homes came into the market, and given our current pace of selling through those homes, we would be completely out of houses to sell in about 4 months. So that's considered to be a pretty low supply, and I'd actually expect that number to continue going lower into our summer season. With 930 sales recorded in April and 3,604 active and pending listings, we actually have more sales and more inventory than we did have this time last year. Okay, so if we go back and look, April 2023, we had 3,177 active and pendings, and then we also had 826 sales at that time. So we're doing better than we were last year on both of those fronts. In fact, we're seeing more supply in our market now than at any time since 2020. So in fact, we're matching, if we go all the way back to April of 2020, we're almost matching this exactly because we had 922 sales at that time and 3,612 active and pending homes at that time. So we're still well below the pre-COVID inventory. Like, this is for 2019 and 2016, 17, 18 were all very similar to these inventory levels, but we actually have a lot more than during the frenzy that we had in 2021 and 2022. So there should continue to be a few more homes in the market than what we've been experiencing the last few years. So you home buyers should have a lot more options, and we may start to see our sales numbers increasing this summer, kind of chasing that inventory. Also in April, the average days on market for resale homes stayed steady at 69 days, just up from I think it was 68 days the previous month, and the median days didn't change a lot either, stayed right at 49 days. So even with more properties on the market, the pace of sales has also increased, and so our days on market, they've been staying relatively lower than they had been in our winter months, and most property listings are getting buyers locked in within the first couple of weeks of listing. But again, it's definitely a slower pace, than this frenzy that we were seeing back in the summers of 2021 and 2022. Average prices per square foot around the area stayed, at or above $200 a square foot. In Benton County, the average was $203. Right in Bentonville, it was $234. Now in Washington County, it was $206 a square foot, and in Fayetteville, $223. As for the overall pricing, April's average sale price of $406,321 stayed right in line with our expectations, maintaining our trend of levels, kind of around this $400,000 mark. So I've been expecting this to move a little bit higher as we get into the summer months, but honestly, if rates stay high and if wages don't really rise, we could even see prices stall out kind of around this level and potentially even retract a little bit from here, maybe toward the end of the year. Now, our April median sale price of $350,000 continues the pricing level we've maintained for the last 10 months. Now, I've often made the case that real estate is one of the best ways for the average person to hedge against inflation, and that's because the price of real estate is heavily tied to the money supply. As more money is printed, we call this monetary inflation, and as there is more money introduced into the economic system, it tends to drive the prices of all hard assets. So real estate, gold, commodities, etc. All those things tend to go higher in that environment. So as you can see here down below, I've included the M2 money supply from the Federal Reserve right below our local pricing graph. And you can see that as more money was dumped into the economy here in 2020 and continuing through 2021, there was a direct corresponding rise in our real estate prices, even locally here in Northwest Arkansas. Now, this happened all over the US for the exact same reason. as you can see, our money supply went from around 14 trillion all the way up to over 21 trillion. And the Northwest Arkansas home prices went from a median of around 200,000 to up to kind of where we're at now, 350,000 by the beginning of 2022. Now, of course, I typically just track, local supply and demand metrics for the Northwest Arkansas real estate market, but I just want to bring this to your attention because these broader economic forces are always at play. Now, you can also clearly see that when the Fed started raising interest rates, that happened right here at the beginning of 2022. They started raising those interest rates. They started doing a quantitative tightening type policy going into 2022. That M2, okay, the amount of currency in the economy, it leveled off right here, right? So it kind of flattened out, even retracted a little bit. Now, around that same time, home prices in our local market began to do the exact same thing and just started trending sideways. So this tells me that home prices will likely remain around this level for the foreseeable future, especially as the Federal Reserve is now set on maintaining a higher for longer policy on those interest rates. As for financing, the 30-year fixed rate mortgage average is now right around 7.09%, and this is lower than the peak rate of 7.8% back in October 2023. However, still a fairly restrictive rate for a lot of buyers. As you can see, in April it did rise, peaking out above 7.2, and it's kind of on its way back down right now. But nevertheless, this is the rate environment we're probably going to be in for a while, kind of bouncing right around 7. I'm hoping that we get more into the 6s later in the year, but only time will tell. Now, despite rates where they are, there has been so much pent-up demand for homes, especially in our area. There have been a lot of people that are sitting on the sidelines, whether they're renting and hoping to get into maybe their first house, or even if they have a house and they're thinking about making some kind of a transition to a different home. Quite a few are finally deciding to start to jump in. We're seeing that a lot starting to happen this year, finally. And with prices staying relatively flat and stable, now might be a good time if you've been thinking about making a transition. And I gotta say, we've even been helping some clients lower their overall monthly bills by making a move sooner rather than later. I know that sounds a little bit crazy because, of course, those mortgage payments are going to be higher with a higher interest rate, but look, you can use the equity that you've gained over the last couple of years from your current home to pay off even higher interest rate debts like auto loans, personal loans, credit cards, things like that. And if we craft all those numbers correctly, it actually can sometimes lower your overall monthly bills. So it's definitely worth checking with a great agent like us to look at those numbers with you and see if that actually makes sense for you and yours at this time. And of course, whether you're in the market for your dream home or you're considering selling your property or both, all of us here at the Lone Rock team would love to assist you every step of the way. So just ask about our Perfect Home Finder program. Again, that's where we go find the overlooked, the off market, the up and coming properties that most people don't even know exist. And be sure to watch our pre-listing price accelerator guide to help you get the very, very most when selling your home. You can find all of that at LoneRockHomeTeam.com. Well, it's shaping up to be an exciting summer selling season this year, so thanks for checking out this monthly market update. Stay cool this summer, and we'll catch you on the next one.